So what is 2023 going to bring? What's the Fed going to do? What are maybe some financial resolutions that I recommend? How about those institutional buyers? Where are they dominating the market? So, folks, let's get into it. Let's talk about this. This is the daily financial news for December 31st. Folks, when we look at 2023, this is what I expect kind of at the macro level. One, I believe the Federal Reserve will fade to the background. I believe, and I believe I've shared a couple of times, that I see two more federal rate increases, both being a quarter, and then the Fed is done. They will be using their voice and tinkering with their statement, but we will not get the federal funds rate going to 6%, in my opinion, for example. I believe 2023 is going to be about good operators and good operators only. It is not going to be a market where speculation pays off. It's not going to be on a market where betting on appreciation pays off. It is not going to be on a market where going on margin is a good idea. It is going to be about good operators, whether that is a real estate investor or a company, a family office or a hedge fund. It is going to be about good old blocking and tackling, good old operations, buying better, structuring deals, all of those things. I believe companies and people will go bankrupt at a higher amount than the last couple of years. The last couple of years were a fake economy where the rules seemingly were suspended. I believe that does not happen, and we will see that in force next or this year. I believe company fundamentals. I believe we will see margin compression. We will see who can protect margin. We were going to see earning multiples. We are going to see companies defend margin or give it up to do unit count. It's going to be a very, very interesting year. I believe the housing market is in a depression, and I've actually done some math to show you how bad it is. You already know that transactions are down 40%, permits down 25%, job losses, company closings, all of that stuff. But folks, let's do the math on how much money has been lost. Folks, if we assume that the median home price is 375 grand, which is actually a little bit less than the national average today, I believe, and we take that and we times it by only 5%, which is the average selling cost or average real estate commission, that equals $18,750. Now let's times that by 2.5 million transactions that we are lower. We're going to do 4 million instead of 6.5. Folks, do you know that is $4.687 billion? I'll say that again. That is $4.68 billion in commission that is not sloshing around in our economy. That's one of the reasons why when real estate goes into a depression, the economy goes into a recession. On top of that, if you figure out most of these properties were bought with loans, we're talking about another $800 million in mortgage fees not paid. So, folks, that is almost $5.5 billion in commission not in the system. Think about that. $5.5 billion. So again, yes, housing is an oppression. I think it pulls the economy into a recession. Folks, there's a lot of talk about institutional buyers. So I found an article talking about where they are and where they aren't. I think this is interesting. So in Q3 of 2022, where were the institutional buyers? They were in Arizona. 14.3% of transactions were institutional buyers. Georgia, 12.7%. Tennessee, 10.7%. Nevada, 10.6%. And North Carolina, 10.2%. So where might you feel the most pain? I'm going to guess Arizona, Georgia, Tennessee, Nevada, and North Carolina. I believe iBuyers or institutional buyers distorted the market. Now, where are they the lowest? Or better said, where are institutional buyers not? Hawaii, only 1.9%. Rhode Island, 2.1%. Maine, 2.1%. New Hampshire, 2.3%. And Louisiana, 2.5%. Again, if the institutional buyers aren't there, there was no big run-up, and you're not going to see the kind of hangover. like you will in Arizona, Nevada, North Carolina, Tennessee, and Georgia. How about where they are selling? I actually found an article talking about where the institutional buyers are selling. Memphis, Tennessee, 19%. Jacksonville, 18. Macon, Georgia, I believe, 17. And Atlanta, 16, closing out with Phoenix, Arizona at 15.4%. So again, any market that is dominated by sellers or buyers, depending on what you want to call them, they are going to be a market that has pain coming. Some financial resolutions that you might want to think about. I believe most folks struggle with understanding the importance of discretionary income. I believe you should take the time to calculate it and then, more importantly, look to increase it. Discretionary income is something to understand because you will go broke not having cash or discretionary income when you need it. I think folks should try to double or triple their discretionary income this year. I think folks need to talk with lenders. You need to figure out and share your strategy and see what you might want to get done in 2023. What is your strategy? Can you get a loan? Are you bankable? Do you have the tax returns and incomes to support it? I, of course, think you need to define a buy box. Do you know what a buy box is? If not, I have a playlist called Deep Dive. Enjoy a 60 or 90-minute video. And then finally, you need to figure out what average is for your buy box. You're not supposed to write an offer until you know average. Once you know average, you can go from there. So again, I think that is important. Lastly, I saw that Goldman Sachs is looking to lay off 8% of their workforce starting in January. Yep, the white-collar recession is coming to finance and tech. We shall see how bad it gets. So, folks, take care of yourself. That is the financial news for the last day of 2022, Saturday, December 31st. Bye-bye.